Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo news segment, and I am Christopher Carroll Smith.
And I'm Robert Coburn.
And this week, the stock market was a pretty wild ride. Monday, we took a pause, started off the week with a pause as investors digested Donald Trump's statement that he actually really liked the tariffs and that he hadn't made any promise to remove them, despite reports the previous week that he had struck a deal with China to mutually remove the tariffs. Turned out he was not fully committed to that. The market did get a little bit of a boost from Boeing on Monday as the mega cap company announced that it will be resuming deliveries of the 737 MAX jet. Boeing has been in big trouble ever since the 737 MAX jet turned out to have some big safety issues, some big technical problems, and all of their 737 MAXs got grounded, and airlines have stopped ordering 737 MAXs. So they now seem to have that resolved, and hopefully their growth trajectory should resume.
Yeah, they stopped producing them back in March, and so they're looked to be on schedule to relaunch it late December, early January. So the stock could go back above 400 per share. So it may be a good short-term stock gain heading to the tail end of the year. Another big stock that jumped at the beginning of the week is Alibaba. They reported a record 38.4 billion in sales on their annual Singles Day. Singles Day is a popular holiday amongst the Chinese to celebrate their pride in being single, the opposite of our Valentine's Day. So Alibaba used the star power of Kim Kardashian and Taylor Swift to help drive those sales to new highs.
And Alibaba was on my watch list a couple weeks ago. It's definitely one that's been doing very well lately, and I think probably has more room to grow ahead.
Yeah, and then on Tuesday, Trump spoke at an economics club in New York touting the current U.S. economic boom, and he used it also to attack the Federal Reserve, calling on them to continue to lower interest rates. He mentioned some countries go as low as negative interest rates. He also continued the song and dance, stating that the China deal is close, but as usual, didn't give any specifics.
Yeah, one of the highlights Tuesday was that Disney launched its new streaming service, Disney Plus, and that kicked off a really big run for the stock. That was one that you were watching last week, right, Robert?
I've been watching this one ever since they announced Disney Plus. I think they announced it early in Q1 of this year. They announced the streaming service, and I've always been a firm believer that with the amount of IP that they have behind them, they are well in line to supersede Netflix. So I honestly feel like the stock is way undervalued right now, especially since on launch day they broke the service with the amount of people who signed up for it. So to me, that's always a good sign because it usually means that they underestimated the amount of people that were looking forward to the platform, because if everything goes well on the first day, that means that usually technology wise they overestimated how many people are getting the service. It's always from my technical expertise, it's always better to see a program underestimate than overestimate, because then you can always catch up to that technology rather than ratcheting it down. Because if you're ratcheting it down, that means you had a bigger initial investment. So that means Disney did it right this time. I mean, there was a lot of people on social media saying, "Oh, it's the platform sucks. I can't get into it." But after like the first day, I mean, the amount of that chatter died down a lot. But there are some reports out there that certain TVs don't support the Disney Plus application as of now, and they don't plan on putting out a fix until Q1. But I mean, there's so many like cheap hardware options out there that you can actually get Disney Plus on. So it's really a moot point. I honestly think this stock's going to hit over 200 in the middle of 2020. So this is definitely a stock I recommend getting. It's a stock I'm holding on to, and anyone long term, this is a stock to get.
Yeah, and it's possibly going to take them a little while to work out all the kinks, but it's kind of like that Popeye's chicken sandwich, I mean, it really it really suggests that there's a lot of interest and that people have the patience to wait for the fixes. And one of the things they did that I thought was really clever was they launched the Mandalorian, new Star Wars TV show about Boba Fett on the day of the Disney Plus launch, which I think it's generating a huge amount of interest. I didn't even know that The Mandalorian was in production. I didn't know they were making that until they were pretty much ready to launch the channel. And I personally had no real interest in getting Disney Plus until I saw that they had The Mandalorian. So I think that helps broaden their audience beyond the people who are just like obsessed with Disney movies. I think they'll get a lot of the sort of science fiction nerds as well.
Yeah, my the first thing my wife was happy about when she got the service working was X-Men from the old Fox kids cartoon on Saturday mornings. That
Right.
she was just so amazed at that show that it was that was on there. I was like, well, they own X-Men, they own Marvel, so they don't just own Disney. Well, there's not just Disney on there. There's Marvel and a lot of other IPs that they bought over the years, including The Simpsons, which I know there's some controversy on that based on the aspect ratio. But like you said, as soon as they work the kinks out of it, the stock is definitely gonna do well.
Yeah, for sure. All right, so on Wednesday, stocks resumed their move upward, despite reports that trade talks had stalled over the issue of China's theft of intellectual property from American companies. That's something that the U.S. has been really pushing China. They've got to stop stealing intellectual property from American companies. China has really resisted any kind of fix to that. So it's really seemed like trade talks had run aground on Wednesday. But part of what moved the market higher on Wednesday was that the Fed chair, Jerome Powell, made some comments reaffirming the Fed's commitment to keep interest rates low. He didn't, of course, announce a new interest rate reduction, but he did seem to suggest that he's going to stay the course on interest rates. And he also said that federal deficit spending is unsustainable. So he announced, or he acknowledged, the problem of debt, that we are way in over our heads on debt. But he said that he doesn't think the reckoning will come anytime soon. So there's a reckoning in the offing sometime down the road. But so he's kind of pessimistic for the long term. But short term, he seemed to give the market a green light to go ahead. He said he doesn't think that this is going to be something that we're going to have to reckon with anytime really soon.
And on Friday, the Dow reached the 28,000 mark. So, and this was after the White House advisor Larry Kudlow announced that the China and U.S. were getting closer yet again to reaching a trade deal. At this point, could we just keep saying U.S. and China are getting closer from now on until forever? Because it seems to just always cause stocks to rise every time leadership from either U.S. or China mention it. So to me, it just seems like this song and dance that just keeps going back and forth, and the stock market just ends up higher, regardless.
There does seem to be no limit to how high the market can go on optimism that someday we may get a trade deal. It's kind of ridiculous.
Yeah. So I mean, who knows what will happen when the trade deal is announced? Maybe the stocks will just explode and we'll break 30,000.
Yeah, yeah. It seems unwarranted, but hey, it's good news for investors, I guess. Although it's not great news for those like me who have been waiting for a really nice, attractive entry to get into the market, because I don't want to buy at these new highs that I feel are, unjustified. So I've only got a small portion of my money in the market right now. One other thing that happened Friday is that we've got jobs and retail numbers that came in. They were not great, but they were not bad either. We had the previous month we had seen a reduction of the retail sales data. This week we did, or this month we did see a little bit of growth. Not a lot of growth. It was 0.3% month over month growth. And then the jobs numbers were not super strong, but we did have some kind of bright spots. California's unemployment rate hit a new record low last month. And, the jobs numbers were on track more or less with what analysts expected. So with economic data coming in reasonably well, even if we don't get a trade deal, it seems like we're doing okay, economically speaking. I would say, though, I've got to offer a caution about the unemployment numbers being at an all-time low in California. The Wall Street Journal reported the other day that states have tightened their rules a little bit and made it harder to qualify for unemployment. So a lot of people who are out of work aren't applying for benefits, which means that the actual jobless rate may be higher than the unemployment numbers suggest. So there may be more people out of work than those numbers suggest, just because we've sort of raised barriers to people actually getting on unemployment. And the
Mm.
other thing about those numbers is that there was a study published recently that Business Insider just reported on about the jobs quality crisis, basically showing that like young men between the ages of 18 and 32, I think it was, uh, used to be, it was like 16% of them were making, no, it was 26% of them were making poverty wages, and now it's over 50% of them are making poverty wages. So even though more people are in work and have jobs, the quality of those jobs has really declined. Wages have remained stagnant, even as the cost of a college education is spiraling out of control. So it seems like, especially for young men, the and especially for young men without a college education, the job market is a harder and harder place all the time, and it's getting harder and harder to make ends meet, even if you're employed.
So you're telling me if I have no experience and this entry level position requires 5 years experience, I can't get this job?
Yep, exactly. It's crazy. The last time that I was on the job market, I was on the job market for a month and a half, and I've got an education, and I'm a pretty smart guy with work experience. So
Dr. Smith.
yeah, I've got a PhD. So it's tough out there on that job market, man. And a lot of the jobs that were being advertised on the jobs boards, they didn't pay well enough to even pay my rent in Salt Lake City. So I honestly, I don't know how people without a college education make it out there.
Trade trade schools.
Yeah, yeah, that is the thing, is like there are definitely opportunities in like HVAC or plumbing if you're willing to do some of the more traditional kinds of professions. So there's stuff out there, but we've got to connect people with those jobs, which is one of the gaps that we've got in the labor market right now, is that a lot of people aren't even aware of the opportunities that they're out there. We've got a program here in New Mexico, actually, Robert, that if you're under 28 and you don't have a college degree, you can get free admission to a boot camp for coding, to learn to code. Um, it's basically a $7,000 program, but they let you in for free. The government pays for it. So that's a pretty cool thing. But just a lot of people don't even know that those kinds of programs exist, especially folks who live in the inner cities and don't have a lot of sort of white collar connections. They may not even be aware of those things.
Are
So
there a lot of tech jobs in New Mexico then?
there are tech jobs everywhere, man. But but yeah, it's growing, definitely. I think the West, and in particular Utah and New Mexico, are seeing a lot of growth of tech jobs. A lot of companies moving to the area. So
Well, that definitely makes sense then to have a program like that, because if you have a program like that but you don't have the jobs for it, then you're not gonna your talent's just gonna leave the state and you're just investing in nothing. So I mean, it's good to know that the tech industry is growing in other places besides California and Texas.
yeah, it's actually doing really well. They're calling the area around Salt Lake City the Silicon Slopes, because like Adobe's moved out there and Extra Space, and just a lot of really big tech companies seem to be relocating to that area.
Yeah, a lot of
So,
fintech companies are moving to Salt Lake City.
yep. All right, well, let's talk about the stocks that we watched this week. I'll go ahead and start here. First, an update on a stock that I've been watching since one of our very first episodes, Kura Sushi. Do you remember when I put this on my watch list, Robert? You got really excited about it because you love their food.
I want to go there. I mean, I haven't gone there yet, but I mean, I've heard so many people talk about it, and it's not so much the food that excites me; it's the like the
It's the atmosphere.
it's the atmosphere. Yeah.
Yeah, so I bought this at about $20 a share, and on November 6th, it reported really, really good earnings, and it's been rocketing ever since. And this week, it topped out about $25 per share, so it's about a 25% gain since I bought it. It did pull back at the end of the week on Friday, and I think that it will probably continue to pull back a bit this week because it just got to a really high level. It moved very far, very fast, and we'll have to do an episode on this, Robert. But there's something called the Relative Strength Index, the RSI, that measures sort of how far and fast stocks can move in a short period of time. And once a stock hits above 70 RSI, typically that's a sign that it's going to pull back. And Kura Sushi definitely got to like 80 RSI. So it got to a really high RSI. So it's going to take a little bit of time for that RSI to normalize before Kura Sushi could even think about moving higher. But it was pretty cool to see that stock take a rocket this week. Secondly, last weekend I talked about Nectar Therapeutics, which it had a really good earnings report, and then it also had some news about clinical trials over the weekend. And it broke out on Monday, and at one point Monday I was up about 20% on that stock, so that was pretty cool to see. It has pulled back, however, and now I'm only up like 2 or 3%. So I think it's only a matter of time before it moves back upwards. So for anybody who's interested in this stock, there's an opportunity to get in, and it definitely has room to run, that Nectar Therapeutics. We've been watching CVS. That one has continued to do well. It seems to be holding at the really nice high levels while its RSI normalizes as well. And Eros is one of the other big ones that I have been watching. That one did not do well this week. Fortunately, I had exited right around the 260 level. I didn't sell off my whole position, but I sold off most of my position in Eros once it hit that resistance level. And as I discussed last weekend, I was waiting for a breakout above 260. Well, instead of breaking out above 260, Eros reported earnings this week, which was a surprise to me. I didn't know that this was coming. And the report was catastrophically bad. They massively missed on both earnings and revenue. Fortunately, I only had that small position because it just plummeted after this report. And I'm not sure exactly what was going on. It seemed like they reported on Wednesday and on Friday, or maybe they just had their conference call on Friday. But anyway, it was all bad news from Wednesday to Friday, and the stock took a dive on Wednesday, but it really took a dive on Friday. I think it's down like 15% or something all told. So I definitely exited that stock once I saw it starting to show some weakness. I'm completely out now, and I'm going to wait until the next earnings date to take another look at that one. So won't be watching Eros for a while.
All right, so the stocks I was watching this week, Nvidia, they reported earnings, and despite posting really strong results, their guidance didn't satisfy the animals of Wall Street, and so the stock traded lower on Friday. However, it didn't go below the 200 mark, so it'll probably start going back up as the end of the year ends, and it'll probably slowly climb back up, hopefully on stronger results after the holiday season. Walmart also reported last week, and they were expected to beat expectations again, and they didn't fail to do so, as they also raised their annual earnings outlook ahead of the holiday season, which caused their stock to jump. I think on Wednesday was when the stock started to go up. So if you look at their stock long term, I mean it's always been going up. So Walmart is definitely one of the long term stocks to invest in. And also Viacom, they're currently in the middle of a merger with CBS, so it's currently dubbed viacom-cbs. Which is very clever, not really. But they beat analysts' expectations with the media company focusing on providing free content on their platform Pluto TV, but they're also partnering up with Hulu, Disney Plus, and Netflix. So as long as the merger doesn't lag between CBS and Viacom, this could be a good stock to look for as more and more people look to cut their their TV cord, and hedge their streaming services, because it is a free service that Pluto TV is. So they do offer premium service, and their partnerships with Hulu, Disney Plus, and Netflix obviously should also get them some money as well. But having a free platform when your IP library includes like Nickelodeon, MTV, is probably a good way to keep people watching while still providing ads and getting that ad revenue as well. So Viacom, CBS, they're taking a different route other than like CBS, well, not CBS, other than Disney Plus and Netflix. So instead of just offering just a paid service, they do offer just a free service and then paid service on top of that.
Yeah, and I think we talked a little bit last week about Tesla and Qualcomm too. Tesla did really, really well this week. It's up nearly 6%. Qualcomm kind of like hung out this week. Again, that RSI that I talked about, it had gotten to a really high RSI level after its earnings. So it spent the last week just sort of normalizing its RSI. But I think that it's set up to move higher this week. So that's definitely one to watch this week is Qualcomm, just on the strength of its incredible earnings and its strong guidance. Um, Also, Robert, Walmart, it did pop in a big way on its earnings report, but then it actually pulled back and it actually ended the day of its earnings report down a little bit, and it continued to pull back at the end of the week. So Walmart is one of those wrong way earnings plays that we've talked about before, where it reports really strong earnings, but the stock actually goes down. And so I think that's a good opportunity to get into Walmart maybe Monday morning if anyone is interested in doing that.
Yeah, but definitely buy it in the weakness.
Yeah, yeah. You always want to buy the dips.
All right. So what stocks are you watching this week?
Well, I'm watching Disney because Disney has definitely been on a big run this week, and market sentiment still seems really positive on the stock. I see a lot of options traders buying calls on Disney, meaning that they expect the stock to go higher in the next couple weeks. So I will be watching Disney for sure. I think Walmart is another one that I'm watching. That one, given that it fell after its earnings report, I think that it's in a good position to move higher, and this is a great opportunity to buy it. A couple other ones that I'm watching. JD.com reported earnings on Friday. It beat analyst expectations on both earnings and revenue. And in that one as well, I'm seeing a lot of interest from options traders buying calls on the stock. So I think that that one could move a lot higher this week. And I'm really interested as well in Snap. They've had a couple really bad months. The stock is looking cheap right now, at least compared to its previous highs a few months ago. And it's definitely had some weakness, but they're implementing a plan to turn the company around. The CEO has had this plan that he's been implementing, and he seems to be sort of at a critical moment in his turnaround plan where it looks like they've got all their ducks in the row. And in February, they are expected to report their first ever profit. So I'm not taking a huge position in Snap right now because it still is like a pretty expensive stock, but I'm buying a small stake here at about $14 per share. And if the price moves lower from here in the next couple months, I will buy it on the expectation that in February, when they report their first profit, Snap will get a nice big jump. So I'm going to be watching for opportunities to buy Snap at a cheaper price in the next few months here. How about you? What are you watching, Robert?
So the stocks I'm watching this week. So Tuesday, Home Depot is reporting earnings. They have beat EPS estimates the past 4 quarters, and the stock has continued to climb upward since 2010. So that's a really good trend. So it's
And Home Depot, I don't know if you know this, Robert, but Home Depot, November and December tend to be their best months,
yeah.
historically speaking.
Yeah, so this is a good long-term stock to buy due to its history of climbing upward in a market with not a lot of competition. However, if you're looking for a stock in the same space that you can trade more frequently, you should look into Lowe's. It's also a good long-term stock, but it has more intraday volatility. Another thing to note about Home Depot is Jim Cramer. He pointed out that there's a trend with Home Depot stock is that on the day it reports earnings, it tends to open high and then dips slowly and then recovers over time. So make sure you buy into the weakness. So if you don't own it now, basically just wait until it dips and then buy it, which means, so that's why it's buy into the weakness. You want to make sure that you buy it close to its lowest point so that way you make the most out of your money. Another stock I'm looking at is Target. They're going to be reporting earnings on Wednesday, and many are expecting the stock to report more growth on the tailwind of the Walmart report from last week. Target surged back in August on its Q2 results. Me personally, I when I walked into a Walmart at the beginning of this year, I was confused because there was like nothing on the shelves, and that was probably a good sign as to why their Q2 results were very strong. So hopefully the Target follows in with their Q2 results, but based on the fact that their shelves have been full again, I'm not sure if that's going to be the case because I do know they put a lot of money into fighting Amazon last year during the holiday season. They invested, I believe it was $2 billion into try and basically compete with Amazon when it comes to like home delivery. Like they had their own delivery service. I believe it was like next day delivery. So it'll be interesting to see how it goes, especially going into this holiday season. How good their Q3 results are going to be. Also, Thursday, Ross will report earnings. This is another one of those stocks that has intraday volatility, but over the long term goes higher and higher. The stock typically goes higher on earnings reports, just like with Home Depot, then dips. So make sure you buy into the weakness if you don't own any right now.
Yeah, Target, their product game is strong. I've been really impressed with Target the last couple of years, just how the quality of their products have increased. It's really become sort of the middle class or upper middle class Walmart.
Yeah.
If you want like a nicer cut of like bargain product, that's the place to go. So I don't know. I'll have to look at Target this week. I think that's a good pick. Hey, all right. Thanks so much for listening to the show this week. If you enjoyed the podcast, please give us a like, a share, or a comment underneath the YouTube video. This is also available on Podbean and iTunes. So if you've got Podbean and iTunes and you haven't subscribed to the podcast yet, give us a quick subscribe. Share us on Facebook and Twitter. You can follow our Facebook and Twitter pages. We'll have links to that as well underneath the YouTube video. And we would love to see you back here at the zoo next week.